Hello value investors, thank you for joining me. Today I want to talk about Datadog and why I believe that investors are going to struggle to see much upside potential here. So we're going to talk about its results for Q3 and its guidance. Then we're going to talk about the market sell-off. Then we're going to bring that all together and we're going to talk about its valuation. So if you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you the stocks I own and why with balanced argument for the stocks I own. You'll see high growth stocks with high multiples and low growth stocks with low multiples. So hopefully you'll find something that suits you. So let's get started. So Datadog reported Q3 results were really strong, okay? And the guidance for Q4 is up 44% year over year. Okay, so that's much better than the street was estimating. The street was pointing at about 37%, so that's very strong. And I followed this company for a little while, and that impressed me. Okay. However, we have to bear in mind two things. One, starting with Q1 of this year, before COVID, Datadog was growing much faster. You can see there on the screen it was growing at 87%, and now going out to Q4, even if we allow for some sandbagging and we say, okay, let's say that Datadog is going to come up at the 47% year over year for Q4, 47% year over year for Q4, that's going to be a deceleration going throughout the year. So it's clearly not really accelerating in the COVID environment. That's the first thing I wanted to point out. The second thing is, if you compare to the same rate last year, so you can see there on the screen last year, in Q4, Datadog was pointing at 84% year over year. So it's approximately half the rate in Q4 this year. So, I mean, I question that, I question whether it's really as strong as many investors. I know that a lot of Datadog shareholders are really bullish. The stock has done really well in 2020, but the figures don't really line up with that narrative, okay? So here's the whole thing, right? So right now in tech, we've seen the last few days of this week how many companies are reporting strong results. Here's a typical example. There are other examples in tech, and there are strong results being reported, yet stocks are selling off. Why? I believe investors are saying enough is enough. We're no longer going to be paying very large multiples for very long visibility. Investors are saying, okay, what's been holding up the market the last several months has been tech, and the numbers of tech show a misalignment between expectations and the underlying economy. So even tech has not been immune. So before we just talk about its valuation, the one thing I want to talk about is not that Datadog hasn't done amazing. Datadog has done much better than anyone is expecting. You can see there the net retention rate is 130%. So that's really, really strong for the company. It's much better than other SaaS companies have reported and are reporting right now in this earning period. But two things I want to bear in mind, okay? Assuming that Datadog grows its revenue growth rates into 2021 at 40%, that means that its revenue growth rate next year would be approximately 826 million. Okay, so that's the figure, right? That puts a stock right now trading at next year's 34 times forward sales. That's a very large premium. So it's not that Datadog hasn't got any competition. New Relic has already more revenues than Datadog. New Relic has revenues for the trailing 12 months of 641 million. So 640 million is more than Datadog has made, yet New Relic's market cap is 3 billion, whereas Datadog's is approximately 30 billion. So it's just this large misalignment and it's for the two companies. One is New Relic, which is it is not really growing very fast, but it's already making more revenue. And then on the other hand, you have this new kid on the block, and it is growing quite fast, but it has less revenue than New Relic and is priced at 10 times more. So just to summarize, it's not that Datadog is not doing impressively. It is doing very well, but there is a misalignment between investors' expectations and what the numbers are reporting. So on balance, I think that investors would do better to look elsewhere. Thank you for listening. See you next time.